Hello everyone, my name is Khan and welcome to the new video. In this video, we are going to learn about what is a higher time frame structure and how we can use higher time frame structure, higher time frame POI, and main thing is here that how we can use higher time frame entry module. So this is a very important video if you don't want to switch in a lower time frame and if you wish to direct entry in a higher time frame. So this video is important for you and you have to watch this video from starting to end very carefully. In this video, I will explain all the thing in a detail step by step to identification of the structure, POI and entry module. So stay tuned. So before switch on live chart, you have to understand on diagram, then you can understand more better. Let me explain here. These are 4 diagrams available here. Let me explain on one diagram. This one is here. In this diagram, we can see market momentum is a base and creating lower lows after break of structure. Simply we are looking for the sell. But which point we can sell? Simply as you know, after taking out the inducement, then we are looking for the sell. And also if market tap on extreme PY, then we are interested for the sell. And basically you can say 2 PY is our sell in a bearish market after taking out the inducement and tap on extreme PY. In this case, we can see here if market went up like this one, and this is important. Please watch this carefully. And after taking out the inducement, suddenly what are you looking here? Simply we are looking for the sell. And in this case, we don't need to use lower time frame. In this case, we have to use higher time frame and direct entry here. Okay. So once price taken out the inducement, simply we are looking for the sell, right? But at which point we can sell here? In this case, after taking out the inducement, market take a small pullback, something like this one. Again take a pullback and market went down, right? So this is basically indication that market looking for the sell, and in this case, it means this area become our PY and we can plan for the sell in this case. So this is our entry here and this is our stop loss and target as per the structure and depend on situation that you will get 3 hour, 4 hour, 5 hour. It depend on total situation. Okay. So this is our first area when we can looking for the sell after taking out the higher time frame inducement. And in this case, there is no lower time frame inducement correct here. Okay. So this is our first scenario. Like once market taken out the inducement and once market taken out the inducement, create a small structure like this one. Again take a pullback, lower lows, again push downside, take a pullback. On this mitigation, we are planning for the sell. So this is our simple process for the sell setup, right? And why we are not taking here lower time frame inducement and the higher time frame inducement? Because market already taken out the inducement right here. So once market taken out the inducement, that means we don't need to wait for it to taken out the inducement before the sell after taking out the higher time frame inducement right here. So what is the next process here? For example, after taking out the inducement, market went up like this one. It means this inducement is a fail, because if market looking for the sell setup here, then market will gives you a sell setup in a first attempt. If not gives in a first attempt, that means market looking for mitigation on extreme PY. So how we can enter in this case? So you have to understand on a second diagram, this one, because this one is the first diagram which I already explained that market must be taken out the high time frame inducement and create pullback and take a one more pullback and mitigation, and we are interested here for the sell. So this one is the first diagram. You need to understand something like this, right? Now switch on next diagram to. Now I will show you exactly that what happened if market failed this inducement. Okay. So in this case, this is our inducement right here and market trying to push higher. Once market taken out this inducement and simply we are looking for the sell, because we don't know where is market going on. Maybe market taken out the inducement, then we can plan for the sell, and maybe market type on extreme PY, then we are looking for the sell. Okay. So once market taken out the inducement, simply we are looking for the sell, and after taking a pullback, market again went up. That means market creating higher high and failed this inducement PY, right? So if market failed this inducement PY, then simply we are looking for the sell on extreme PY. So where is extreme PY? Look at this one. This is our extreme PY is here. Means this is our last order flow, the last buying momentum before the sell. That means if price tap on it, then we are interested here for the sell. Okay. So this one is our next scenario possible here. Tap on it and then we are interested for sell. And this one is our direct entry here. And remember one more thing is here. This PY must be create this a clear structure. If there is no PY, so this sell setup is not valid here. Okay. So I will talk in the next diagram 3. So you will get more clear idea. So this one is the first idea when we are looking for the sell after taking out the inducement. Once market taken out the inducement and create a structure something like this one, take a pullback and mitigation, and we are interested here for the sell. And same thing applicable in our second diagram. In the second diagram, market ignore the inducement and we are looking for the sell. But what happened? Market not create a lower loss, market just creating higher high in the same time frame, and market tap on extreme unimmediate order flow is here. So once press tap on it, then we are interested here for the sell in a downside. Okay, so this one is our next process when we are looking for the sell. Now look at the diagram 3. In this case, we can say we have only diagram. In this case, we have only inducement right here. After break of structure, market just create inducement. In this case, there is no extreme PY, only inducement is here. So how we can deal in this situation? Firstly, you need to understand here, if market momentum is bearish, simply we are looking for the sell after taking out the inducement. Look at this one. After taking out the inducement, in a first time, if market create a structure like this one, so simply we can sell here as we have done in a diagram first one, right? So this one is our first area when we are looking for the sell. And what happened if market not create a structure like this one and market just went up, okay? And sometime what happened, market taken out the inducement and market push higher like this one. That means this PY is a fail and there is no inducement and there is no extreme PY is here. So in this case, how we can deal? In this case, simply we can plan for the sell after structure shifting. So how structure shifting? Like first pullback is here, means this low is broken. That means structure looking for the sell setup, right? But you don't need to sell here because we don't know where is market going on. Because after taking out the inducement, market not create here any kind of bearish structure. But in this case, if market creating a structure like this one, and you have to wait for it to take out the inducement in this structure like this one. Market went down, again going high, this inducement taken out and market went down, take a pullback, mitigation, and we are interested for the sell. Remember this part, because there is no extreme order flow, order block is available here, okay? So if no order flow, order block is available here, but market taken out this inducement, and after taking out the inducement, start structuring something like this one. So we are interested for the sell right here. And this direct entry applicable in all higher time frame. Like if you are using like 1 hour, 50 minute, 5 minute or 4 hour or daily, any time frame you are using. So simply you can plan for this sell. If no setup clear like this one, then you don't need to enter for the buy and sell. You have to wait for it to break the previous high or low for the next opportunity. Okay. So I hope this one is clear for you. And maybe you will get some difficulties to understand this one. So you can watch this video multiple times. I'm very sure that if you understand that how structure work in a higher time frame and how we can take entry, so this thing become very easy for you. Okay. Now let's understand on diagram 4. In this 4 diagram, what happened here? Same thing here, market break the structure, and after break the structure, market create only inducement here. There is no extreme PY here. So same thing applicable as we have done diagram 3. So if market went up, okay, first attempt is here, after taking out the inducement, market push downside, take a pullback, and then we are planning for the sell at this point right here. So this one is the first scenario when we are looking for the sell after taking out the inducement. But what happened here, if market not create here any kind of like extreme order flow, order block is here, so simply we can follow this process here for the buy and sell. Okay, because this is a bearish market, of course we are looking for the sell after taking out the inducement and structure shifting here in the same time frame, and we are planning for the sell. So this one is a similar like 3 and 4, both looks like similar. But when market not create here any kind of like clear structure before the buy and sell, then you don't need to buy or sell. Okay, you have to wait for it for clear opportunity before the buy and sell. Once market taken out the inducement, take a pullback, and then we are interested for the sell right here. Okay, so this is a process for the buy and sell in a higher time frame using higher time frame structure. There is no lower time frame, and simply you need to follow. And one more thing I want to clear here, if market momentum is a bearish, okay, in a strong bearish and strong bullish, so we'll get more opportunity. And sometime what happened, market moving in a range and market created both side chalk and both side break of structure. Okay, so you will get sometime good setup and sometime not. Okay, so you have to pay attention once price tap on your higher time frame PY and then market create structure like as I mentioned in a diagram 1, 2 and 3 and 4. So we can plan for the buy or sell, otherwise no. Okay, so these type of setup to create structure, it take a lot of time. Okay, so you have to pay attention, and these type of entries are applicable for those traders who are not able to watch the entire day or full of a screen. Okay, so you can use higher time frame like 1 hour and 4 hour, and you have to wait for it, create a structure something like this and price tap on your PY as per your plan. and then you can place a sell limit and buy limit and forget. Okay, so now let's switch on a chart, then we can understand that how things looks like real on chart, and then we can understand how market is over. Okay, so let's see. In this case, we can see here market momentum is overless, and this is our bar play. Okay, so you can understand more better that how things actually working. Okay, so market momentum is away and creating lower lows. So once market momentum is away, simply we are looking for the sell after taking out the inducement in the first attempt. If market failed to taken out the inducement, and then we are looking for the sell on extreme point. This is a very simple thing. Okay, so in this case, when market break the previous low, that create a break of structure because higher time frame structure showing bearish and overall market direction is a bearish. So when market momentum is a bearish, simply you need to identify there is any inducement available or not. So look at this one. This is our previous structure creating lower lows, lower high, and this is our actual inducement. And this is our minor inducement, and this is our major inducement. So if you don't know how to mark the major and minor inducement, and I already make a video on it, so you can watch them. This is a very simple thing. And to start the any structure, any inducement, start from top of the move. This is our structure like this one, and this is a structure between this one. Create one more pullback, push higher, again push downside. So if anything happen between this one, this is called internal, or you can say minor inducement is here, right? So this one is our inducement which taken out this one. If market taken out this one, then we are interested for the sell, right? So let's see what happen next after this one and what we can expect here. Look at this one, how price is reacting. Market taken out one more pullback is here, and now this inducement transfer here to here, and this is also called as a major inducement, right? Major and minor inducement is not about the structure, means can be a single candle and two candle and maybe larger candle. Okay, so it totally depends on situation. Sometimes you will see two candles pullback become our major inducement, and sometimes you will see very larger move is not a valid inducement. Okay, so it totally depends on situation. In this case, this is our pullback, that means market taken out this one, and we are interested for the sell after creating lower lows. So in this case, as you can see here, market take a small pullback and again going higher high. That means this inducement PY is not working here, and now we have to wait for it to tap on extreme PY. So where is extreme? The last buying momentum before the sell is here. It means if price tap on it, then we are interested for the sell right here. Okay, so let's see what happened next here. But market not tap on it and just broke this low. That means we are interested for the sell or not? Of course no. Why? Because market just broke this low and market can continue to go higher. Why? Look at this one. This structure look like this one. Bullish taken out the inducement and maybe go higher to tap on it, and then price went up. Okay, so that's why we are not interested here for the sell, because if market creating for the sell, then market must be create a inducement in a same time frame. Okay, so we can plan for the sell. So let's see what happened next after this one and how we can deal in this situation right here. In this case, we can see here market just creating lower lows. It means if market creating lows, simply we need to wait for it to take out the inducement, create lower lows, mitigation and sell. This is a very simple process as I explained recently. So this point become our inducement. It means if market taken out the inducement, then we are interested for the sell. So as you can see here clearly that market taken out the previous low. That means this is our inducement right here. I'm just going to zoom this part so you can understand more better clearly. This is our inducement which is taken out. It means if market broke this low and we are interested for the sell right here. Market break this low means this is a small pullback is here and creating a structure something like this one. Look at this one. This is our pullback here. Create one more pullback, push downside, take a pullback and mitigation, and we are interested for the sell. Why we are looking for the sell? Because the inducement taken out. Why this is inducement? Because this is impulse and this is corrective phase, again impulsive phase. That means this structure looks like this one. That means this is inducement. Once market taken out this one, creating structure like this one, mitigation and sell. So this is a very simple way for the sell setup here. Okay, so let's see what happened next after this one and how we can enter here in this case like this one. Okay, so let's see what happened next after this one. Okay, market creating one more pullback is here and market trying to go higher. And in this case, we are planning for the sell at this point and put the stop loss just above the high. Okay, where is target? This is a very important thing. Simply if market creating like larger structure, for example, if you are looking for the sell right here and put the stop loss just above the high, and where is target? Target the previous low. Okay, this is a very simple thing. But what happened here in this case? In this case, we can see there is this low is a very close right? So that's why we are not interested to put the stop loss and target is here. We are going to increase our target point. So how we can increase our target point? Simply you need to use Fibonacci tool. As I mentioned in so many videos, you have to put the stop loss, you have to put this low, and target is here, means bottom to top here. So this is our Fibonacci, and you can use this setting. You can take a screenshot and you can save it for more better idea. Okay, so this is our Fibonacci setting here, and in this case we can see here 1.618 is our target, 2.61 is our target. Okay, so in this case I'm using 2.618, around 4 hours is here. Okay, and you can also set 1.618. Why we are not setting 1.61? Because this is a very little bit smaller. That's why we are using 2.618. And you can use also both our target is here. Both are good. Okay. So let's see what happened next after this one. Market start pushing downside, and then what happened? Market just pushed downside, and finally market hit our target. So this is a very simple thing. When market momentum is bearish and create a structure like this one, and this is our entry model based on higher time frame. There is not. In this case, you don't need to use any other time frame is here, like 1 minute and 5 minutes, nothing. You have to direct take entry as per your higher time frame. If you are using 5 minutes, then you can use 5 minutes as a higher time frame, and if you are using 15 minutes, then you can use 15 minutes as a higher time frame and 1 hour as a higher time frame. That's it. Now let's see what happened next after this one and how we can react after this one if market momentum is completely bearish, and simply we again wait for it to take out the investment. In this case, we can see here market just pushing upside, taking out this one, but this is not actually investment. Look at this one. Why? Because price went up and down and up, again pushed downside and again went up, but market not break this low. So this is a counter trend. We can see again pushing downside, take a small pullback, again pushing downside, taking out the again pullback and push downside. That means this is our investment. Right. So once market taken out the investment, then we are interested for the sell. So let's see what happened next after this one and how we can react after taking out the investment. Oh, so finally market taken out the investment in a first time. If market taken out the investment in a first time and make this low like this one, this is a pullback again like this one and push downside, take a pullback, and we are interested for the sell again for the sell side. Okay. So let's see what happened next after this one and how we can react. Look at this one, broken this one. And mitigation, stop loss just off the high, and where is target? Target as per the previous Fibonacci tool. Simple, this one is our previous low and previous high is here, and 2.61 target is almost here, or you can set 3 hour, which is very good, looks like here. Okay, so this is our target and this is our entry and this is our direct entry. In this case, we are not using any kind of lower time frame entry. We are using just higher time frame investment and higher time frame PY mitigation. That's it. Simple structure create here like this one, pullback and going higher high, take it this one and sell. And why we are not selling like this one? As you can see, in this case, break the structure, take a pullback, but not break this one in a first time. This is our first pullback is here, not break this one and just create the high. And after that break one, that's why we need investment. Okay, but in this case, we can see market just broke this low in a first time. That's why we are looking for the sell on the pullback mitigation without any investment confirmation. Okay, so I hope you clear every point. So let's see what happened next after this one. Okay, market trying to push downside, and then what happened? Market pushing downside again and again. Okay, so let's see. Okay, so finally market hit our target point is here, which you set here. So everything was planned as per our plan. Market momentum was bearish, taken out the investment, create a structure like this one. So we are interested for the sell. Again, what are you looking at? Simply we are looking for the sell after taking out the investment. So where is our investment? This is our investment, but market not taking out this one, just push downside. Simply we need to wait for it to take out the investment. Finally, market taken out the investment, and after taking out the investment, we are interested for the sell if market create a structure like this one. So market taken out this one, if market trying to push downside like this one. Okay, so we are interested for the sell in a first time because this one is a first time. If not create here a structure like this one and then market trying to go higher, so we are not interested for the sell until market create investment and push downside mitigation and sell. So this one is the very simple way. Okay, so let's see what happens next after this one and how we can react after that. Okay, so market just creating high, that means there is no bearish indication here, and market break the previous high, which is our previous high is here. That's create a chop. because market momentum has been changed, bullish, bearish to bullish, and this is our previous lower lows and lower high again created lower lows is here, right here. And let's see what happened here. In this case, again, we need to wait for it to take out the inducement. So where is our inducement? Look at this one. So once market taken out the inducement, then we are interested for the buy to the upside because market direction has been changed. So finally, market taken out the inducement right here. And once market taken out the inducement, simply we are looking for the buy after taking out the inducement. As you know, market momentum is a bullish, right? No. Why? Because this one is a not valid inducement. This is an inside move. That's why. Okay, look at this one. I'm just going to move this chart here. Look at this one. This is a strong bullish candle. 3 candles create a bearish but not break the previous candle low. That's why this is an inside move right here. Simply you need to wait for it to take out the inducement. So where is inducement? Is here, right? Please understand this one. Small pullback going higher high. This is not pullback here because this previous candle high and previous candle low both are protected here. So if you don't know how to mark the valid pullback, so you can watch my video how you can mark a valid pullback. Okay, so let's see what happened next after this one and how we can plan for the buy to the upside. So this is our investment. If market create any kind of like bullish structure, so we are interested for the buy, but finally market break this investment right here because the previous high is broken, take a pullback. So this point become our investment because of this one, like pullback, again going higher high, take a one more pullback, again going higher high because the investment break the previous high like this one. Okay, so this is the investment. Once market taken out this one and create here any kind of like bullish structure, definitely we are interested for the buy. So how we can buy in? Look at this one, small pullback, buy and here. So we are interested for the buy at this point. And where is stop loss? Just below it. And where is target? As per the previous Fibonacci tool, this one is our 1.61 is the target, and you can set 2.61 is also target, right? Okay, so let's see what happened next after this one and how price is react here. And market hit our stop loss. This is our decisional PY and this is our valid loss is here because we are using just higher time frame. There is no lower time frame. After taking out the inducement, market structure create like this one. Like this is a bullish structure here. Taking out the inducement and start creating higher high. Take a pullback, mitigation and buy to the upside. So same thing we have done. Take a pullback and going higher high, mitigation and expecting going higher high, but market not create a structure like this one. So if this one is a fail, so we are interested for the buy on extreme point. And also if not tap on extreme PY and there is no extreme high probability order block and order flow, so simply we can plan for the buy after taking out the same higher time frame. Okay, so if market momentum is a bearish in a counter trend, simply you have to wait for it like structure shifting like this one, again going higher high because the first high is a broken. That's inducement in a bearish market, again create bullish structure, pullback and mitigation and going higher high, and also create like this one structure and going higher high. And also we can plan for the buy like this one for the higher high. So these are simple way for the buy if market taken out the inducement in a same time frame. So let's see what happened next after this one and market pushing downside and first high is a broken. In this case, we can see here very clearly that previous has a broken, but after broke this one, market must be taken out the inducement. Then we are interested for the buy at this point in our same time frame. Okay, so because of this one, you have to identify there is any unmitigated order flow available or not. Okay, so in this case, we can see there is no unmitigated order flow, order block is available. Everything is mitigated here. So if everything is mitigated here, simply we are looking for the buy. Okay, which point we are looking for the buy on extreme unmitigated order flow. So there is any unmitigated order flow available or not? This one, no. Only this unmitigated order block is available here. That means if price tap on it, so we are interested for the buy. And what happens if price not tap on it and what market going higher high? Simply we can plan for the buy after taking out the same time frame inducement, means the structure shifting. Okay, how it's work here? I already explained that market momentum pushing downside like this one, and again trying to go higher in a first time just broke the high and again pushing higher high. That means this inducement is a fail and market looking for the buy. So market taken out the previous low, that's inducement, and start pushing higher high like this one. So we are interested for the buy and going higher high, take a one more pullback, again buy here. So simply we can say here, this one is our first area for the buy and this is our second area for the buy. This is a very simple thing is here. Okay, so this thing applicable if there is no PY mitigation, there is no order flow mitigation, there is no order blockage mitigation, and this thing applicable in all time frame everywhere. Okay, so let's see what happened next after this one and how we can react at this point. Okay, so let's see what happened here. And in this case, we can see here very clearly one more thing I want to mention here. The previous structure was created here and the previous high was here. Which one is a broken here, push downside, and we are again looking for the buy. So which point we are looking for the buy? After taking out the inducement, market start pushing higher high like this one. This is our previous structure. Pushing downside, break this one. That means the structure looking for the buy. And after that, what happened here, right? Market pushing higher high, again going upside. That means structure looking for the buy, and we are interested for the buy to this point, pullback, mitigation, and going high. But put the stop loss just below it because of the safety side. Okay, so let's see what happened next here and why we are planning for the buy, because of the investment taken out in same time frame. So this is our entry criteria, but put the stop loss just below it because the higher time frame structure shifting. Okay, where is too bullish, and this is indication. So where is target? Target the previous high, and also we can use Fibonacci tool for the extend target. Okay, but in this case the previous high is a good area for the target because you will get around 3.5 hour. Now let's see what happened next after this one and how we can react after this one. Price pushing higher high, again going higher high, as simply we can see market pushing upside and finally hit our target point is here. Okay, so this is our hit, our target point is here. And one more thing I want to mention here, this is our previous higher high which was created at this point. Higher high is here and this point become higher low because the change of character is from here. And after this one, market create a break of structure. So this was our previous break of structure was happening here, and this one is our one more break of structure create here. Look at this one. So once market create break of structure here, so we are again planning for the continuation to the upside right here. Okay, so let's see what happened next after this one. Market going higher high. Okay, so finally market created a break of structure and we are interested for the again buy after taking out the investment. This is our area when we are interested for the buy. If no, then we are looking for the sell. Okay, so let's see what happened next after this one. Okay, so finally market hit our this target is here and market create this investment at this point right. So once market taken out the investment, simply we are looking for the buy after taking out the investment. If market creating higher high is here, so simply we can plan for the buy. Put the stop loss just below it. And where is target? Target we can see here the previous highs are very close here, so we can use Fibonacci tool. High to low is here. Where is target? At least 1.618 and maximum target is here 2.618. So these two area here when we can set our target. Okay, so let's see what happened next here. And also one more thing is here, if market break the previous high, so we can set our stop loss on break even point also because of the previous highs are broken. That's why. Okay, so this is a simple thing is it. And if you would like to put your stop loss on this low is here, so you can. Okay, otherwise it totally depends on you. What when market break the previous high or low, so market take a small pullback and then market went up and went down. Okay, so let's see what happened next after this one. And market push downside, take a this one and market push again downside. So in this case, how price is a react here? In this case, you will get a break even, stop loss, whatever. Okay, but this is a valid area for the buy because structure is a bullish. Right, so now what happened here? In this case, we can see a market create one more structure, higher high, this is a previous higher low, higher high. And this area become our new break of structure here. After break of structure, market start pushing our downside here. And after that, what happened here? Market break this low is here and create choke because of the structure is a chain bullish to bearish. So once market break this low and first area is here, when we are interested for the sell after taking out the investment, which one is here? So after taking out the investment, we are planning for the sell, and also you can sell on extreme PY. First area is here after taking out the investment. So let's see what happened next after this one. And market not create here any kind of thing is here. Look at this one because this was our first pullback is here. And if market take a small pullback and went down and create this pullback is here, so we are planning for the sell, right? As I mentioned. But if market not create a structure like this one and after create a pullback is here, went up, that means market looking for the bullish to the upside and trying to mitigate on extreme PY. So there is any extreme PY available or not, right? You have to check here. This is our last buying momentum before the sell is here. So once press tap on it and we are interested for the sell directly here, this is our first area when we are looking for the sell, because just of it there is no immediate order flow, order block is available. So this one is an extreme PY is here. We are not using any kind of lower time frame confirmation. So simply we can plan for the sell is here, and also we can take a Fibonacci tool for the additional confirmation. 1.618 is here, and let's see what happens next after this one. And one more thing is here, you can use like this one, because this is a pullback, again going high, push downside, mitigation, and you can sell here. So this is a one more entry module applicable here, and this is a first entry is a direct entry here, and this is a pullback entry here. Okay, but both are direct entry here, right? So let's see what happens next after this one and how we can enter in this situation, right? So this one is our last buying momentum before the sell is here. So once press tap on it and we are interested for the sell, okay? And where is stop loss? Stop loss above the high and first position on a break-even point, right? And where is target? Target are similar, the previous low, 1.618 here. And you can also take a partial and fixed target, the previous low right here. So it totally depends on you that how much capable you are to holding the situation, right? So let's see what happens next. Market again pushing downside and continue pushing downside like this, okay? And again, market reached this point is here, almost a 2.8 hour, and this trade hit our 4 hour, okay? And after that, market trying to recover to the upside and create one more structure here. And finally, market again going high, and this thing applicable here like bullish and bearish to bullish here, okay? So this process will be continue in a bullish market and bearish market. In this trades example, I explain so many things here, like bullish setup and bearish setup, bullish structure fail and bearish structure fail, everything like break even, stop loss, valid buy and valid sell, everything. You can see how many trades I explain here in a detail step by step, and this is all higher time frame direct entry here. And it takes a lot of time to create the structure, and this is not happening in a few hours. No, it takes a lot of time to create the structure. Sometimes market take an entire day, sometimes take a few hours, okay? So it totally depends on you that which time frame you are following as a higher time frame. Like if you are using 5 minutes, then you can get a entry setup within few hours, okay? But if you are using 1 hour, so it can be take a 1 hour, 1 day for to complete any bullish structure and bearish structure to create opportunity. So it totally depends on time frame, that which time frame you are using. Like if you are using 15 minutes, so very highly chances that in a day at least you will get a one setup. So this is a process to take a trade in a higher time frame, direct entry without any lower time frame confirmation. I'm very sure that you are enjoying this video, and if you don't know, understand any topic, any point, I will suggest you that you should watch this video multiple times, and this is a very important and very powerful video for you. And after watching the entire video, this type of thing and this type of video will help you a lot to level up your trading skill. So thank you so much everyone to watching the entire video. I'm very sure that you have learned a lot of things, and if you are new, subscribe our YouTube channel and so on our free Telegram channel, link in description, go and check out. And I will see you in the next video. Happy trading.